Mr. David Stevens. He is our presenter today. And the Native Agricultural Financial Services is really excited to have this specific topic and presenter with us. So thank you, Mr. Stevens.
Thank you very much. As Ms. Moore said, my name is David Stevens, and I am with the Southern Education Risk Management Education Center. And through a cooperative agreement with USDA Risk Management Agency uh, and the University of Arkansas, which is the home of the Southern Risk Management Center, um, a we're calling it a risk management project was birthed, and crop insurance is one of the primary initiatives of that, educating ag producers on what's available in terms of crop insurance, educating them on the importance of it, and in many cases, educating on the affordability of it. I am one of um, six different individuals that are directly involved with this. Um, we are only working in the southern center region. As you can see on the slide, you see Extension Risk Management Education Centers in western, northern, east, northeast, and the southern. This particular effort is concentrated in the southern region, as USDA via NASS, which is National Ag Statistical Services, and other vehicles looked at their data. One of the things they found was that the historically underserved communities, underserved producers, these limited resource underserved areas is where they saw the most vulnerability, if you will, in terms of exposure with the lack of risk management practices, specifically identifiable with the lack of crop insurance. Uh, as I said, the southern region, we have Alabama, Arkansas, Georgia, Florida, Kentucky, Louisiana, Mississippi, North Carolina, Oklahoma, South Carolina, Tennessee, Texas, and Virginia. I am a native of Oklahoma, but I currently live in North Texas, and the states that I serve are Texas and Oklahoma. We have two individuals that actually live in the Little Rock, Arkansas area. One of them services Arkansas and Virginia. The other one serves Louisiana and Florida. A gentleman lives in Mississippi and he services Mississippi as well as Alabama. We have a young lady that lives in Georgia and she services Georgia and South Carolina, and a gentleman in Tennessee, he handles Kentucky and Tennessee. Let me go back one. What we do as navigators is various activities very similar to this. We participate in conferences. We participate in workshops. We participate in one-on-one sessions. We will provide direct technical assistance with producers or small groups or small organization. But our emphasis is again having producers stop and take a look at what do they have in place in terms of risk management? Have they seriously sat down and put together some type of risk management strategy? Now, I will tell you, not always does that result in a need for crop insurance. But we feel like as you begin to grow and become more dependent in your production, grow your production. We know that crop insurance is one of those vehicles you want to incorporate in your risk management plan. So, as we get into uh, actual one-on-one and small group sessions, We will help you look at some of the matrix. Um, we want to help you become aware of the AIPs, which are that network of insurance providers and carriers that underwrite and support the agents that actually sell you the crop insurance. I want to emphasize to you that USDA RMA agency, Risk Management Agency, is the background agency to that, but they do not sell crop insurance. Crop insurance is not a product sold by the government. It is managed by the government. I'm not sure what state you are in, Oklahoma. There's the Oklahoma Insurance Commission and a similar commission in Texas, and I'm sure in other states. It is a state agency that oversees those independent for-profit insurance agencies or insurance companies that provide you in your property, casual life, whatever your insurance needs may be. RMA, in terms of crop insurance, sits in that same type position. Um, Crop insurance historically goes back to the early 1900s. Um, it became federal, really more of an experiment. And as we got into 1980s, just a little bit of history behind it. Um, Let me see, my screen is on top of mine. Let me move it over here. There we go. Okay. Um, as more and more farmers begin to take and participate in crop insurance, um, it became apparent that there needed to be more congressional involvement. A lot of people were not happy with what they were getting. The disasters were seeming to be more and more frequent, and we start seeing congressional legislation, more increased bills, really trying to recover or respond to many disasters. And as a result of all of this ad hoc type bills, it became more apparent that they really needed to put in place a more comprehensive program of crop insurance that would be inclusive of the variety of things that were not necessarily included in the original crop insurance programs prior to 1994. Um, Again, these are two of the historical programs. Crop insurance started in 1980, more aggressively, RMA program in 1996. Um, I wanted to get into this part of it. Again, RMA in terms of services, uh, Risk Management Agency is the agency of the federal government. They do provide education and training outreach, which is what they funded in this particular instance with us. They oversee government programs. Um, they provide uh, the products or help through our input and input of other producers and the agents. They make sure that the programs are available and make sure that these programs are properly funded because there are some programs and crop insurance programs that there are some subsidies there. So they make sure that those subsidies are available to assist farmers in the actual affording the cost of crop insurance. Um, Here's a little bit of a directory of the regional offices. I'm not sure what states that are on board here, but here you can see regional offices in for me. Um, I'm trying to find mine is Oklahoma City. I don't see it on here. Um, hmm. Oh, those are states served by that region office. I'm sorry. When we start looking at what are the size of the farms that we're looking at, what type of production are the growers in this region looking at, and what are the crop insurance products most likely would fit their needs. It began to really narrow down to maybe three primary ones. One is a whole farm revenue protection. I'll go into that a little more detail. Microfarm is a new product that came about as a result of significant feedback from various individuals and agents and other community-based organizations that the products and cost and expense and coverage for small farmers, it just was not a good fit. They came up with a microfarm policy that they felt like would fit. And again, we'll go into a little bit more detail. In Texas and Oklahoma, where we have a lot of livestock production, specifically a significant amount of your cattle production, where you've got significant pasture land, you've got forage, you've got hay production, and so forth. There's a policy that is almost strictly based on rainfall. If you don't get rainfall to grow your pasture land or your hay production, it significantly impacts your cattle, enable your ability to feed your cattle for the most part. Or some people are hay farmers, or they grow and sell hay to those who need it that may be actually in the actual livestock. So these are policies specifically for those areas. Whole farm production. Uh, Over here in the right, you see it's 17 million, which pretty substantial amount of production, but whole farm would cover multiple commodities on your particular property, thus the term whole farm. So you don't, even if you are a single or maybe one or two crop producer, uh, at a very large level, whole farm is a policy you may look at. Um, One of the things that is sometimes a challenge for new producers and sometimes a challenge for older producers is that they want you to have 5 consecutive years of Schedule F. For those of you who are not familiar, Schedule F is that business form very similar to Schedule C, but it is for agricultural producers, where Schedule C is just for individual for-profit businesses. So Schedule F is what is required. If you do not have 5 years, there is a process where they could take your Schedule C and create a comparable Schedule F for those periods that would help you qualify and meet the needs of this 5 year requirement for that. And again, if they're going to insure you, they want to be able to see what your past production revenue numbers look like. That is what they're insuring. So we can't come in and write a policy for several $1 million for a section of land or a farm that never produced that much ever. And then they have 100% loss, and their expectation is they're going to get those millions of dollars. So it won't let you overinsure, but based on what your production is, it will give you some coverage levels. And again, this will go from 50 to 85%, depending on what your desire is. As you add your desired coverage level from 50 to 85, your premium, of course, is going to go up accordingly. And again, there are some subsidies there to assist with the cost of the premium. Microfarm, very similar to whole farm. As you can see, these are insurance plan tailored for any farm up to $350,000 for many small farmers. This is a better fit. And again, a Schedule F is required. I don't believe it's the full 5 year, but again, the same process of looking at your Schedule C or your past production. If you are a new and beginning farmer, then the 5 years is not a requirement. Uh, the most previous year, or there would be some averaging of whatever crop you're growing for your area. If you're growing um, corn, for instance, then they would look at what corn production or average corn production is for your county or very specified area there. So, in the absence of actual production records for new and beginning farmers or accurate production records, then the county average or area average is used. And again, there is some subsidies there to assist offset some of the premium costs for all of these. Pasture rangeland, again, based on rainfall for the most part, there is a grid of 17 by 17 miles that they look at, and based on rainfall levels, it will trigger a payout if you have coverage, pasture rangeland forage insurance coverage. And again, these are cattle producers that are dependent on pasture land for grazing. They're dependent on pasture land for the hay production that they can bale and put up hay for the winter season when they don't have pasture growth on their grazing land, and as well as those producers that are in the hay production area field. And rainfall is critical for all of those cases. And this is a coverage 70 to 90%. Premium on this is a little bit lower. Uh, Payouts will certainly match what your revenue is and what your production is for these particular products, for this particular product, let's say. Um, Here's an example of a microfarm revenue protection. In this example, you'll see if you got a 50, 55, 60% coverage level, you see the subsidy is upwards to 80 microfarm subsidy, upwards to 80%. As you get up to 80%, you see it drops to 71%. When you get to 85% of a coverage level that you desire, then your subsidy will only be about 56% of your premium. But this is an example of how much the subsidy will kick in. So many producers are not even considering looking at crop insurance because they're concerned that the cost is so high. And of course, the premium is pretty substantial in some cases. But when the subsidies kick in, you find that it is a very manageable premium for most producers. Um, Subsidies are available for beginning veteran farmers and ranchers. Um, there are discounts that are available for them. There's an additional 10%. Um, and again, to qualify as a new and beginning, you have to be less than 5 years of actual crop or livestock production. So for veteran and new and beginning farmers, there's an additional subsidy of 10% for your premium. What do I need to apply? Um, at least 3 years of historic Schedule F tax forms. Again, Schedule F is a tax form. It is a form that you would have submitted or you would have produced in past years to file with your tax return. It is very similar to a Schedule C, but it is specifically for farms. Um, they can take a Schedule C if that's what you've done in the past and you really want to pursue crop insurance and produce a Schedule F. Um, your crop records is something that is extremely important. Your production records, what you've historically produced, your certainly sale records for livestock is something that's important, but depending on the type of coverage that you want to get, you absolutely will always need to have good records. Schedule F is a nice summary of your year's activity, but your actual production records and other is going to be as critical, if not more critical, when you want to sit down and talk about the type of coverage you want to get. Um, there are some tools here to assist with that. Here's a online tool that you can use, and I'll send copies of this to Haley or Harley, I'm sorry, Miss Moore, um, so that those who want access to it can get access to that. And again, here's another premium calculator, if you will, where depending on what state you're in, you can very quickly drop some of your numbers in terms of your county and so forth. And these calculators are really for crop producers and so forth. Another important tool for those who really want to pursue is where do you find an agent? Um, The agent locator is a tool that is on the USDA website. Once you go into RMA, there is a agent locator tool. And when you click on the agent locator, you will be able to put in your county, your state county, and it will pull up those agents that service your area. Now, you don't have to buy crop insurance for someone in your area if you know an agent somewhere else, or you've got a close friend or partner or relative that is using an agent. You certainly want to use them. There's no requirement that you have to use an agent in your area. Again, the agent is a for-profit insurance agent. They work under AIPs, which are more regional type companies that they sell under, but understand, they are independent, for-profit companies, agents, individuals. They're not government. This is backed by the government, but this is not a government program. You're not buying from USDA, you're not buying from RMA, you're buying from an agent. Um, One of the things to consider that there are certain uh, requirements in terms of your reporting. What dates you have. There's windows of dates for you to get your crops in. There's windows of dates where you have to do your report. There's windows of dates where you have to purchase your crop insurance by. So as you start your discussion, you want to know what are your deadlines and dates and in terms of uh, planning, harvest, and things of that nature, because those are very specific to make sure you satisfy the requirements to make sure that your production is covered. Um, Why is crop insurance important? Those of you who have been in ag production or familiar with it or even new to it, you probably know or realize that we're finding that the margin of profitability in ag production is getting very narrow these days. And the reality is that many farmers are just one bad year away from going out of business. And those that are at that point who have significant losses in their production, in many cases, can't recover. And crop insurance will provide you some level of capital relief in the event you have a loss that will enable you to continue operating. And if you say, live to go another day or live to go another year or another growing season, but it's very important. The other thing is for selfish reasons for USDA RMA is we have to have some stability in our food supply chain. We can't have critical producers just right on the brink of going out of business And when we see substantial numbers of uninsured producers, we know that they may be at that level. And all of a sudden, we start having some food security issues, and that's something that is certainly a responsibility of USDA to make sure we've got uh, safe, reliable food supplies. And another note at the end is that there was about $14 billion paid out in 2022. Some years we have significant rainfall in areas, we have flooding going on, we have fires, we've had some hurricanes and wind and hail damage. So there's a variety of issues that have affected, in many cases, our agricultural producers, and uh, those who had some level of coverage had some capital or some reimbursement of their loss that helped them continue operating. Um, Again, just reiterating the information provides capital and types of credits. Again, there is some subsidies to assist with your premiums and the ability to recover from those losses. Some of the takeaways, no matter how large or small your farm, there is some type of insurance available. I talked about three of them, but there are dozens of different insurance programs out there. Um, Coverage is available in all 50 states and counties within those states. While there are only 14 AIPs in the United States, multiple agents are actively involved in selling and managing crop insurance policies. USDA RMA regulates, provides rates, subsidizes premiums. It does not sell crop insurance policies. It regulates them. Are there any questions? Again, it's Southern Risk Management Education Center. My name is David Stevens. I am one of several crop insurance, what we call navigators. Uh, if you would, those, if you would scan this and answer us very few questions on a survey that we have. I'll give you a little time to, if you would, scan that for us. That feedback is important to us. One of the things that I want to emphasize that whether you buy crop insurance or not, it's important that you really take some time and look at what your risk management is, especially as you begin to grow your operation. Those who may be buying a farm and getting into farming, um, really look at, hey, if I was meeting with a group of people and I asked, hey man, if you broke your leg tomorrow and were not able to get out on the farm, what do you have in place? And in some cases, farmers have partnered and say, hey, my neighbor and I work together. One guy said, hey, my brother would come. The other guy says, I don't know. He really had not thought that as a possibility or the impact of that. Certainly, we know that accidents happen, but had not thought through what the impact would look like, had been so blessed that nothing like that had happened. So, risk management is not just crop insurance, it's understanding what liabilities you have, what are those gotchas that can happen to affect you. So, we want you to look at the entire gamut, take a comprehensive look of what does risk management look like for me? Not just the loss of my crops, but the loss of my, what if the main guy that works for me quits? I got one main guy, man, I count on him. He's my right hand. If I get sick, I know he got it. He calls you one day and said he's gone. Do you have a contingency? Do you have a second guy that's been tagging along and he's ready to step up to that next level? Do you have a family member that you can call in? Crop insurance is dependent on you meeting your deadlines and requirements in terms of harvest and things like that. What happens if your harvest team is not available and you can't get your crop harvested in the time, and you have a loss that is your fault and it may not be insurable. So, so what things have you got in place to ensure that you've addressed those potential losses? Um, and again, the other one was information. I think this one is the actual survey. And again, if you would scan that and answer questions, and then I know I've got one more that actually shows you um, who we are and where we are. Dr. Ron Rainey is our principal leader there at Southern Risk Management Education Center. And as I said, Serena Hill is there in Little Rock, Arkansas. LeGrand is in Mississippi. Tiana is in Georgia. I'm David Stevens. I've got Oklahoma, Texas. Shamir actually lives in Little Rock, but she covers Florida and Louisiana. And then Mr. Williams, you see, has Tennessee, Kentucky, and North Carolina. He actually lives in Tennessee. As you might imagine, we travel quite a bit. We are willing to come and participate in any way we can, whether it's Zoom or in person. We will come to small community meetings. We will come and meet with farmers one-on-one or small groups of farmers and share whatever information or give whatever technical assistance that we can.
So we do have a couple questions.
Okay.
Is there an average time it would take to get a crop insurance payment?
The once everything is validated, the payments, I don't know what the average time is, but I know the payments come out pretty quickly. It's not a long drawn out because again, understanding this environment, understanding that, hey, once you have a loss, then the need to get that payment, that money, so you can recover is important. And in many cases, you need to get prepped and ready to plant again or harvest again, or you need to get prepped to go buy more hay or feed for your animals. So there's not a long drawn out process once. I know for the pastoral rangeland protection, I think based on rainfall, once it reaches a certain level, it automatically triggers a payment. So in some cases, you don't have to take a lot of action to file a claim. Some of these things are in place, but I don't know what the average time is, but I can tell you it is pretty quick. It's not a long drawn out process to get a payment once the loss has been verified.
Okay. Thank you. Our next question is, do you have to have crop insurance to be able to receive USDA loans or USDA disaster assistance payments?
Okay. So, first of all, if you are an ag producer, if you have a farm number from FSA, you should have had or you should have what is called NAP insurance, NAP, non-insured. It's a non-insured product. They don't want us to talk about it too much, but let me say, at a minimum, you should have NAP. NAP is a product, it is a disaster product that for certain groups of producers is at no cost. For a very small cost, you can do what is called a buy-up. So if you have at least NAP, that should make you eligible to get an FSA loan. Depending on the level of loan you want, they may require you to have some coverage. Again, when I buy a car, I have to have insurance. That car is my collateral. If that car is not insured, they lose the collateral, I'm done. And that lender's done. So I want to say, first of all, if you're talking about a loan from FSA, you should have NAP. and depending on the type of loan you're trying to get, it is very plausible that you may be required to have some type of crop insurance. In terms of meeting any disaster relief program, that is not a requirement for that. When they have OLAP and some of those other disaster programs, crop insurance was not a requirement.
Well, thank you. We do have another question.
Okay.
It says, I understand in order to get the pasture rainfall insurance, there has to be at least one animal, beehive, etc. Is this correct?
Um, that I'm not sure if it requires one animal. Sound like you've done some investigating.
And David, um, I can get you in contact with the individual who did our presentation in the fall over pasture rainfall, pasture range
Rangeland?
and forage.
Yeah.
He is an insurance agent,
Okay.
um, but you don't have to buy insurance from him. But he would be a good person to be able to get in touch with to get some of that information. If you're interested, just let me know, and I most definitely can connect you
I
there.
I have not heard, that's the first time I've heard that statement in 2.5 years. Now, that don't mean that it's not that it's not an accurate statement. Uh, Pasture rangeland forage, you almost take for granted that you are covering your pasture land for your livestock. So to go and get it without livestock, again, there are hay producers that don't necessarily have farm animals because they're producing hay to sell. That is their business. That is their business. But I would get that answer and send it back to you.
Yeah, and I'm sorry, Mr. Stevens. Individual who asked that question's name was David too. So I was
That's okay.
actually
But
uh,
but I will send it back to you so you can get a confirmation.
okay. That'll be perfect.
Okay.
I am not seeing any other questions. If you guys have any other questions, please feel free to add those into the chat or the Q&A box. I did want to share my screen one more time, just to share this program that it's a new program that the Native Agricultural Financial Services is participating in. If you or somebody you know could benefit from any of these resources, feel free to scan the QR code or just go to our website at nativeagfinance.org and connect and just fill out the connection information. And somebody will gladly reach out to you to be able to get started on part of this assistance that the Native Agricultural Financial Services is providing. Um, uh, Thank you, Mr. Baker. That was a really nice comment. We're really happy to be providing these Zooms. I did put in the chat. Um, if you guys would like to do a deep dive in that pasture, rangeland, and forage, there is a link in the chat to a previous recording that the Native Agricultural Financial Services has hosted. And next month, we will have a crop insurance agent as our presenter going over spring crop insurance. So we look forward to anybody and everybody joining us. If there's any other questions, this would be a really good time to put them in the chat or in the Q&A box, or even unmute yourself. Um, but we are so glad that Mr. Stevens joined us today. He does a really great job presenting. And I just want to take one last time to thank each and every one of you for joining us today. Have a great day.
Thank you.